Hi, welcome to Control and Compound with Darren Mitchell. I'm your host, Darren Mitchell, and I am super excited for today's guest. We have Nick Karadza from Rockstar Real Estate. Nick, how are you today?
I'm good. I'm good. Thanks for having me, Dan. I always appreciate it. It's always good for a chat, and you're always high energy. So whether I am or not, you're going to drag me up. So I appreciate that for sure.
It's that salt water coming off the ocean here on the East Coast. Perks everybody up.
I thought it was all the alcohol you guys drank out there, but
Well,
no, I'm joking. I'm joking.
little alcohol, little donair keeps you going. Uh, so you are one half of the Rockstar duo. So before I get started, speaking as a fellow business owner, and I speak, I think, on behalf of all Canadian business owners across the country, going, man, I wish I had that name. That is just everyone I talk to, your competitors, other groups, they're like, oh, it's the Rockstar. I'm like, oh my God, that's a good name. So you got to tell our listeners the story. How did you guys come up with the name Rockstar when you first started, and tell me that kind of story.
Okay, so look, first I appreciate you saying that, because when we started, no one was saying that. All right, so how it started was when we ended up opening our own brokerage. So we were with a couple other brokerages beforehand, and then they just didn't believe in what we were doing. They came to someone that had recently joined our team, the broker of record at one brokerage, and said, "Don't work with these guys. Working with investors is never gonna work." So we're just like, why? If no one's believing in us here and they don't want to support us, why don't we just go start our own thing? So I ended up getting the correct license to do that. We were tossing around names. We both wrote down a list of names, and it was like the standard, like cash flow, real estate, high net worth, realty, this type of stuff. And there were some fun ones, and one of the names was Rockstar Real Estate. I think it was on Tom's list, and we looked at it and we're like, wow, we kind of really liked it. We're like, could you imagine we actually named the company that? Wow. So we bypassed it, but then I don't know, it was a couple days later or whatever the case would be. I remember Tom called me. He was driving along the highway. He's like, Nick, I got it. I figured it out. He goes, you don't invest in real estate to be a landlord. You invest in real estate to live your rockstar life. And your rockstar life is your life on your terms, whether it's at the cottage, reading a book on the weekend, or whether it's partying on the weekend in Vegas. Whatever it is, it's your life, your terms. It's your rockstar life. That's why you invest. And let's call it Rockstar Real Estate. And I was like, holy crap. Yeah, that makes sense, man. That's perfect. And we went with it. And when we started, I got to tell you, there was a number of people. It wasn't the people working in the real estate offices that we were calling. The people working in real estate offices were like, wow, I love the name. That's so cool. A lot of people in the industry, sales, right, like realtors, were like, who do these guys think they are? What kind of name is that? That's ridiculous. What's with these guys? So they didn't like it. We got a lot of flack, and our team got some flack early on. I don't think they thought we were for real. But then over the years, they got to know us, and they realized that we were, legitimate people doing business in what we thought was the best way possible. And we earned a lot of respect, I think, in the area. And it's a lot of people like it now. But early on, it was not the case for sure. But that's where it comes from.
Great story. Thank you. And you guys, I guess your start were real estate brokerage, but you've expanded and grown so much more from there. So can you just kind of tell me what makes you different than a typical real estate brokerage? Because that would be a tiny piece of what you do. Yeah, just kind of expand how you help investors.
Yeah, I guess really the difference here is the real estate brokerage component of it to us is almost an afterthought, really. What we really do is we work with investors to hold their hands and train them and educate them. So our goal is to educate investors to make them self-sufficient so that they have the tools they need to live life on their terms, right? Because for us, we felt like when we were younger, any financial options or investment options that came up, it was always like, hey, you give me money and then I'll give you more money back. And there's the fees associated with it and that type of stuff, whether it was mutual funds or financial advisors selling other things, private equity, whatever the case may be. And the goal was like, hey, and when we started investing, it was just us figuring it out on our own. So the goal was like, how do we help educate people so that they're self-sufficient? So it's not about them just coming to us and we're investing for them and they hand us money. And we've been offered that a lot of times. They're like, guys, here's just some money. Can't you just invest for me and let it work that way? And that's cool. And that works for some people. But our goal was to make people self-sufficient. so that and they became investors and had the skills of an investor that they can then take to any other area of the country or wherever the case may be, and then invest there or use those skills for profit there. So the whole idea was it ended up, we have this like investment group that we work with members, and we do a few events in person. Like larger kind of like conference type events a few times a year for them. I think we have classes that we give them, and we do like a kind of members only podcast type thing and newsletter. So just a bunch of educational resources to try to kind of let people know here's what's really going on in the streets, here's current day stuff that's happening, and kind of fill them in that way. And then the idea is then they can work with someone on our team who's also been an investor to then find the house, and we'll represent them as working with them when they find a house and support them through the whole process. It's not about selling a house and saying, okay, good luck with it, hope it goes well. It's about supporting them through the whole process. So we took that approach. We took the long-term approach from the beginning, and as a business, and it seems to have worked out. We were never chasing kind of the next commission check. It wasn't about that, and it's I guess in some ways the tortoise wins the race. It's not the flashiest thing. It's not the easiest thing. Supporting people sometimes after the fact can be more difficult than sometimes you think. But I mean, that's the approach we took, and it's kind of worked out for us.
That's great. So let's talk about the team, because I deal with a lot of Rockstar members, and in our office we're always excited to get a Rockstar member, because we like, there's a pretty good chance they're already successful or on their way to being successful, and they've unlearned some of the bad things that we're taught in traditional financial planning. But what struck me at the beginning when I started working with Rockstar members is it's like, who are you working with? And then like they name some guy, and it's like, oh, well, I've heard like 12 different guys of other people working with, and this person is, and then I realized just, how your team has grown. And what I love is, you have different team members that do different things. So tell me about that model and how that works.
Yeah, so the team growth was look, when we started, there was never really this plan to, be the type of business that we are today, really. It's just all kind of just one thing compounded slowly, and then it just morphed into what we are today. What we've been really fortunate about is that we don't recruit anyone. Unlike some real estate companies that do recruiting and stuff, we've never done that. But we've been really fortunate to meet some very good people who have decided to get further into the real estate investing game. And as they have, they're like, hey, look, I want to work with you guys. I know what you're about. We've had good experiences together. And then, they end up joining the team. So I think that's where we're really appreciative of the people we work with. And they all have this long-term approach in mind. We have people that have come off the street and they're like, hey, I'm a great salesperson. I can sell. And we're like, that's great. Lots of people can. But it's not just about the sales path. As you know from your business too, look, anyone can just sell the product. But if you're really doing what's right for people and supporting them over the long term, it's a different approach, right? So that's the approach that these guys have all taken too, guys and girls, and that's what we've been fortunate for. And then as they've matured as investors, they've all kind of then got into their own niches, and some people chose like any investor, right? They chose the multi-unit path, and some people are doing like infill projects. There's one guy in our team that focuses on custom modern homes, and he focuses on that type of stuff. And there's people that do a little bit more student rentals, and so there's second suites and all these different things. So people kind of have their own specialties and in different areas that they've kind of really focused on, because like any investor, they find something that works for them and they kind of go deeper into stuff. And they still dabble on the outside of things, but then they kind of go deep in one area too. So it's just kind of worked out. It's worked out that way a little bit organically, really. There wasn't really planning around that. It's just kind of happened, and it's been a fortunate accident.
Love it. And then you also have one of the most successful real estate podcasts in the country. Now I say real estate podcast, but your podcast is about so much more. So it's your life, your terms, and how'd that podcast start, and what are you trying to accomplish with that podcast? Because you can listen to a bunch of episodes and then forget you guys are in the real estate business, because you share so much other stuff. So tell me how that's evolved through the years.
Yeah, I don't even know how. I don't know if it, it's not even, there's no real estate in the title. Like we talk about Bitcoin, there's no Bitcoin in the title, and people consider us sometimes a Bitcoin podcast, and then we talk macroeconomics. we talk to guys like you about insurance, and it's all, and then we obviously talk about real estate stuff. So it's all over the place. But I think we purposely look. There's only so much real estate stuff you can talk about, right? Like when it comes to real estate investing, there is some new things because laws have changed, and there's some new things going on and that type of stuff. But for the most part, it's most of the things have stayed relatively similar, right? I think I'd imagine in your industry is about the same type of thing. Like there's slightly new products, but the kind of core principles of what you do is kind of remain the same, right? So you could probably only, I don't know about you, but we can only talk about it for so long. So we're like, okay, so what else can we talk about? And then we're like, we wanted to make it about something bigger than just real estate. So that's why we called it the Your Life Your Terms Show. And we wanted the opportunity to talk to anyone living life on their terms, or kind of like that had something that fit into that category. So one of the guys we met here in this area is a naturopathic doctor. He's now the exclusive naturopath or performance naturopathic doctor for the Phoenix Coyotes, right? And we want to have him on the show. We talk about cortisol levels and testosterone levels and smoothies in the morning, and we talk about this random stuff, but it's all along the same lines about the Your Life Your Terms, right? So I think it was more selfishly that we called it the Your Life Your Terms shows, because we wanted to do that different things as well. And I think maybe it served us a little bit, because over time it's just growing, and we've just kind of had more and more people reaching out to us that want to be on, and we've been able to reach out to people as it's grown that maybe we couldn't get access to in the past. Like we've had some good people with some good followings in the macroeconomics world, which has been very insightful for us, because selfishly we're kind of nerds on that type of stuff, and we enjoy it. So it's worked out well. So I didn't even know how long it's been. I think I noticed the other day we're 200 and something episodes. And I'm just drawing a blank, and it's been, I guess, a few years now, but really it was used as just a way to kind of just more content to put out there, with the hopes that if some people locally where kind of Rockstar is located listen to it, they would end up wanting to do business with us. If we provided enough value, they might be like, hey, these guys kind of know what they're talking about. Maybe I reach out to them and we'll do business together. And that was the whole idea behind it. And now it's kind of like, it's a nice thing to do. It's like a different vibe to it. It kind of breaks up the day nicely, just like conversations like this, right? It's kind of cool.
Yeah, I love it. You can dig in deeper. And I mean, I'll tell you, when I started my podcast, and obviously we're not just starting out compared to you, but what I love, it was, okay, well, I don't want to talk about cash value life insurance and infinite banking. Great. And then I'm like, well, what am I going to do in episode 11?
Yeah.
Because again, stuff I'm doing, well, it started in 1846 and it's been around for 150 plus years and stuff. So it's like, all right, well, and then it just kind of evolved into, well, what do I like? Well, I like investing in real estate. I like money. I like learning ways to make money. I like learning ways to live a better life, and all those things kind of, your life, your returns, kind of similar to that. And it just kind of evolved, and it's like, well, if it's stuff I'm interested in as a real estate investor and business owner, well, great. Other real estate investor, business owners, and people that want to get into that field will be interested, and it just kind of evolved from there. So I love it. So I do want to ask you about. Sorry, go ahead, Tom.
Sorry, I was going to say, I think there's more to life than what we focus on every day, and sometimes people get caught up in the, in our society on this side of things, right? Like in U.S., Canada, and the way we look at things, and compared to some other countries in the world is what I'm comparing us to, is it's always just about everything that we do. And it's not everything has to be about money or progress or this or that. Sometimes it's just kind of diving deeper into something that interests you, that can bring value to, you get value from the conversation, the other person you're talking to, and then anyone listening, if that's something they choose to listen to, they can get value from it too, right? It's kind of nice to do things that way versus, I find anything that I listen to or people that I follow, it's like if it's always just the exact same thing, you can only go through, like you said, by episode 11, you're just like, okay, I get it, so it's just nice. I think just in life is about more than one or two topics, so it's kind of nice, I guess, again, selfishly, to break it up and see different things.
Yeah. So let's talk about one of the topics you guys love chatting about, because I'm fascinated by Bitcoin, right? I have an economics degree, and just the whole, printing of money, the stuff that's going on. I'm just fascinated by Bitcoin, and I'm just consuming information. And I know you guys are active in the Bitcoin world. Tell me how you get involved in Bitcoin, and how's it going, and what kind of you see as the future for Bitcoin.
Yeah, look, there's a lot of people that are smarter than me in that space for sure. But we've done a lot of reading, and we've been fortunate through the podcast to speak to a lot of people that have spent a lot of time in the space as well, and learning from them. So I think for us, we dismissed it early on. First of all, Bitcoin to us is very different. Some people will say crypto, and I think Bitcoin kind of stands alone in the crypto world. Not that crypto is good or bad or anything about that, but it is a little bit different just because of the way it's truly decentralized. A lot of the other ones claim to be decentralized, but they're not so much, right? So that's one of the big things that we learned early on, and we dismissed it. We like the technology, but we kind of dismissed Bitcoin as a form of value, or as a form of money early on. And it was when COVID hit that we had time to dive into it deeper. So what was it? That was 2020. So that was just over a couple years ago. And we dove deeper, and that's when we started buying. And we were fortunate because at that time it was at a down cycle, and we started buying at a pretty decent price, and it's worked out very well as a store of value for us, even with the volatility that exists in the new asset class. But it's hard to. We were old school gold guys, right? So like yourself, when you understand that when 2008 the financial crisis hit, we were just like, what the hell just happened? What is this? Like, why did everything just blow up? What's going on here? And we were down at a mastermind meeting in the U.S., and some of the guys there that were investors, we had never seen such fear on their face. This is when this was in the end of 2008 when what was it, Bear Stearns just was collapsing, but maybe it was just before when that type of stuff was happening. And we're just like, what is going on with these guys? They're all kind of fearful. So we decided to kind of drill down into the money system a little bit more. We read books like The Creature of Jekyll Island, which was a big one for us. Then we started, Currency Wars was later. What was it? The Guide to Gold and Silver by Mike Maloney was a good one. There's a couple other ones that we kind of went down, and we started kind of understanding just historical money and history and the money system that we're involved in. And that's when we started looking at inflation, and we started looking at debt levels, and we're just like, oh my God, this is nuts. Like, once we started understanding that, so that kind of turned us into a little bit of like gold guys, a store of value guys. And then we started believing in real estate even more, because we liked real estate before, but then understanding the fundamentals behind it, about just the debt levels and if they're going to inflate things, these hard assets like real estate and how they would perform. In our opinion, we believed in them even more. So it became even more interesting to us. So with that as a background, when we finally came around Bitcoin and got a greater understanding of it, we're like, hold on, is this thing going to hold value? And is there money from the systems going to go into this money? Because historically humans have always kind of like moved over to the hardest form of money. And that's there's a good history lessons on money from the Bitcoin Standard, which is more a book about historical money than Bitcoin. You're nodding. I guess you've read it by Safe.
Yeah, I've read it. Yeah.
Yeah. So like the first, 100 pages or the first half of that book or so, it's all about just money and historic money, and it just kind of makes you think. So then when we looked at that, and we said, well, this thing, if it's kind of like some principles of gold, because but there's a limit to it, and then you can send it very easily, and you can store it yourself. And we started getting these kind of like basic principles behind it. We're like, holy cow, there might be something here. So we've definitely gone down that rabbit hole in a big way, but it's been a valuable rabbit hole, I feel, to have gone down. And I really think that it's going to serve ourselves, our families, people that we've been able to share it with in the future. And we're long-term investors. I guess that's something everyone should know. And I think you have a similar approach. Like, things go up and down, and that's fine. But we're old school. We're not flashy. I can't jump on. I'm the worst stock trader in the world. Like, I can tell you, I am the best person at buying high and selling low. Emotions get involved. Like, I suck. But if I can park money and let it sit there and kind of do something for me, that's why real estate serves me well. That's why things like your products serve me well, and those types of life insurance products, when we've done things like that. That's why things, if I just let this Bitcoin sit there, I think in the long term, it's going to be really valuable, because I think there's a migration to kind of over to that type of space. That a lot of things are happening there.
Yeah, people ask me all the time, what do you think's going to happen to the stock market? What do you think's going to happen to the value of Bitcoin? And I'm like, I haven't a clue short term. But I
Yeah.
get a pretty good feeling long term, real estate will continue to perform like it has for thousands of years. And Bitcoin long term, yeah, I believe in it long term. What it's going to be next month, if that's what you're buying it for, nothing we can do to give you advice on that because crapshoot in a month. But long term, yeah, from just a fundamental basis and the limited amount of coins and stuff, I believe it's going to be long term. And this isn't investment advice; we're just having a conversation here.
Yeah. I think what you said there is the key. Like it's these fundamentals, right, in any market. And we're in this world where everything needs to be clickbait for media to get attention. So it's all clickbaity headlines for everything and everyone's short-term everything. But if the short-term trends don't trump the long-term fundamentals. Now, if the long-term fundamentals of something change, then yeah, like you got to revisit your hypothesis and then kind of make some changes. But if those long-term fundamentals, typically that's the foundation that everything's built on. So unless that starts to falter or really change, nothing's really changed in the short term, right? One of the guys that we learned a bunch from, Rob Minton in Ohio, one of the lines, I don't know if it was his line or he got it someplace else, I think he got it from a different book. But he was the first person to introduce me to it. And what he said was time in the market is more important than timing the market. And I thought that was always really insightful and then when I started following these longer term investors that had success, all of them were saying, well, it didn't matter industry, it didn't matter real estate or stocks or bonds or everything. They're just like, oh yeah, like I can't time the market. I just believe in a trend and I park money there and I just wait for it to happen. But like, if people can time markets, then everyone would be able to do it. But it's just like anyone that says that's what they can do on a regular basis. I mean, no one's been able to prove that, right? So that's something that we generally have lived by, and we look for trends and we look at the fundamentals of something, and then we just kind of are long-term investors. That's why I have gray hair. I got to wait for everything to kind of happen.
Nice hair, by the way. So
I'm catching up to you. Yeah. This is fine.
It's my kids call it. I tell my kids I'm bald by choice. Just I'm not. Really,
look, my youngest daughter calls me a watermelon head. I'm like, Ava, why do you call me a watermelon head? She's like, because you're bald like a watermelon. I'm like, but there is a little bit of hair up there. She's like, it's just fuzz. Sometimes watermelons are fuzzy too. Like, thanks, Ava. Thanks. That's my 8-year-old daughter. That's the relationship that we have together. It's very, very special.
Yeah. I had a 4-head, then the kids started calling a 5-head, a 5-head, a 6-head, a 7-head, and then I just went, took the razor.
They're ruthless, these little people.
so let's jump into real estate. We're gonna have a lot of real estate investors listening to this, and every single day I deal with real estate investors. Probably 80-90% of my clients are real estate investors. So it's funny when we just kind of have the little one sheet on what they're about before I meet with them, or one of the wealth coaches meet with them. It's almost like you can tell if someone's going to be, if they're successful, just kind of what they're a part of and what they're doing. So if you were talking to someone looking to get in, or a relatively new real estate investor, what's the biggest hurdle people face for buying that first property? Because I find that's getting over that first property hurdle is huge. And once they do that, then they determine if it's right for them. But what would you advise someone, waiting to pull that trigger on that first property?
Yeah, I think most of the time it's going to be fear, right? There's obviously some financial consideration for sure, but the majority of the time it's fear, because they're thinking about all the horror stories they've read someplace, and maybe they've even amplified them multiple times, or they've heard them through a broken telephone, at some backyard barbecue, and someone all of a sudden, there's stories about someone had a property and the tenant totally destroyed it, but you couldn't evict them for a year and a half. And before they got evicted, they got 2 grenades and threw them in the house and blew it up. And, there's just like, well, you're like, whoa, I haven't heard those ones before, right? So I think that to me is be the biggest thing. And I know for me it was too. Like when I bought my first property, I remember I was 21 and I remember leaving the lawyer's office, and this was the worst property I could find, by the way, because it was a flip. And I remember driving along the highway and I almost started crying. I had my stomach was in knots, and I almost started crying because I was so scared about all the stuff that had to happen. I had just took all the money I had in the world at that point and bought the crappiest property I could find, right? And you just start thinking about all the things that can go wrong, and over time, what ends up happening, what we've seen with the investors that then take the plunge is they start, they face a couple of those things that they thought could go wrong. So, a lot of people are afraid they can't find tenants. They're like, oh, I'm not gonna be able to find a tenant, or I'm not gonna be able to find a good tenant. And then they go through the process. They're like, wow, there was a lot of demand, and I really got to run background checks and selected, I had a selection from multiple people, and I feel like I got a really good family. And and then they've passed over that fear, and then maybe there's another fear about them damaging the property, and over a period of time they're like, oh, they really haven't destroyed the property. And so there's all these little things that as an investor you just go through, like anyone, like you just go through this growth curve, and once they bypass that, they're just like, okay, I'm not so worried anymore. So what else you got for me? Do I want another one of these, or what else can I do? Do I have a different strategy or whatever? But I definitely think people will talk themselves out of it based on fear, unrealized fear that they're hearing from third-party sources that have never even invested in properties. And if you can get it from first-hand information, then yeah, I'd value that a lot more. But I think that's probably the number one thing. Like, people sometimes, it's either fear or they're waiting for the perfect time, like all the eggs to all the ducks in a row in life to be able to buy this property. And I tell people, I'm like, look, there's no perfect time to buy a property. It's like having a kid. There's no perfect time when you're like, okay, I'm ready to have a kid. Snap your fingers, and the kid can arrive. Everything's perfect. We're ready. It doesn't work like that. There's a little bit of pandemonium involved, and you know how it is closing on properties. You're running around a little bit. You got to do all this dealing with banks. They're like, oh, we don't want to give you the money all of a sudden. I need 2 more documents from you. Then we'll give it to you. So there's this stuff involved. But after they go through that, then they're like, oh, this is not so bad after all. What else? Let's move forward from here.
Okay, so just comment on that. So I love the first property, fears. It's the same as savings. You talk to people and it's like, oh, listen, I'm not saving for retirement or doing anything because we're saving for our wedding. And then, well, we just get married. We're saving for our first house. Okay, but we can't save now because we're just, my wife's pregnant. We're having a baby. Well, we can't save now because we just had a baby and she's pregnant with number 2, so we have kids. And well, now we have daycare expenses, and now they're all in competitive sports. Now we're saving for university, and now the kids are out on their own. Now we're ready to retire. Oh, wait a minute, we don't have anything. So yeah, there's never a good time. So just take that plunge. Now, what about lack of money? Because I know, especially Southern Ontario, you're not buying properties for $100,000, to close on a property for a $100,000 value. How are people finding creative ways to come up with money for that down payment?
So the number one way we see is some form of joint venture, right? And that it's a real barrier, especially with where prices have gone, it's definitely harder. But that's where we see people kind of joining forces and getting together. And I guess it's no different than past times. Obviously the prices and the amount of money needed is different, but it's no different than the solution to that was the same now as it was, years ago. So I'll give you an example of a guy in our office that young guy in our office, didn't have the funds to kind of go in on one himself, bought one with a friend. So he joined up with a friend. They bought one property. They owned it for a period of time. They were able to refinance that property, and they bought a second one together. And then at the same time, they were able to then join with a third friend, and the 3 of them have now gone in and bought a property together as well. So, that's how these guys have kind of got over that hump, right? They were early 20s when they started. And now all of a sudden they're part owners of multiple different properties. But you have these streams of cash flow, and you have this capital working for you where you wouldn't be able to get that in the past. And especially in the inflationary environment that we've been in, they finished much further ahead doing that than leaving their money in a bank account or earning some, small interest rate return. With inflation, your purchasing power gets diminished. So, they could have, I'm not saying just real estate, there were other investment options available to them, but that's how they overcame it. The nice thing for them is that because they were able to use some leverage and the cash flow offset that leverage, they were, they get a little more bang for their buck that way as far as a return. But that's definitely the biggest thing we see. Sometimes it's family members, sometimes it's friends, it's coworkers, but it's people kind of just joining forces and being like, let's make this happen.
So let's talk about Southern Ontario, because you're based in Southern Ontario, so a lot of your business obviously is Southern Ontario. properties. I've got some family in the Port Credit area, and I remember, they've been there since 1988, and I remember just watching their house go up in value, and then it was the first one, that the neighbors sold, and it was like 800,000, an unheard of number at the time, and they came back 2 weeks later, and the house was plowed down, and they were devastated because they just had replaced the carpet and stuff, and then he saw these homes, and then it was $1 million, and being the genius that I am at the time, I'm like, listen, if you can get $1 million for that house, man, sell, sell, sell. And now that house, I don't even know what it's worth, but it would start with a 2. So how many times in Southern Ontario real estate market have people told you, well, it's too late, you missed the upside potential, like it's too late. So why is Southern Ontario still such a great place to invest, and why is it going to be a great place to invest for the future? Why do you see property values continuing to rise?
Well, that's a loaded question. So we have, every few months we do like a 1-hour presentation on that. So it goes deep as you want. But look, we're not real estate people that just think real estate just goes up. Like our family got hit hard in the early 90s with real estate when our father was flipping properties. Very hard. We almost lost everything, and he was flipping properties, he was flipping paper, got something tied up. It went from about 750,000 to about 400,000, in relatively short order. So we're not that we don't believe that, and we don't operate from that principle like some people in real estate. They're just like, oh, it's real estate, it just goes up. So I guess I just kind of want to preface it with that, like real estate goes down, it really does. I think, and I know back then looking, doing some research, the fundamentals were different then versus now in the area. In this area, specifically in Southern Ontario, we're definitely speaking to a lot of developers and looking at a lot of numbers. It's quite interesting what's happened. Like, our population numbers have jumped, right? So the federal government has tried to increase our population, and they have been, through immigration, they have been allowing more immigrants in. And we get about 45, it depends on the number you look, it's probably about 44 to about 47% of immigrants come into the Ontario area. The majority come into the kind of greater Toronto, Golden Horseshoe area, southwestern Ontario, right? Most of the economic activity and stuff comes there. So got a bunch of immigrants there causing population growth. What also started happening in 2014, and this is when you still really see dynamics change in the market here, is in 2014 the government changed the rules for non-permanent residents, and they opened up more options to try to get non-permanent residents here, so like students and foreign workers, and they would give them a more easy or clear path to citizenship if they came here as a non-permanent resident. So then after they changed the rules, it took about a year, but from about 2015 onwards, our non-permanent resident numbers, so like students coming here, just started jumping. They just started, I mean, if you look at the slope, like it just started going like this over the last, 7 years or so. And those non-permanent resident numbers are not included in our population growth numbers. They're totally different. So we've had this huge influx of immigration, which causes population growth formally on our numbers, but then we've had these non-permanent residents coming in as well that no one was really accounting for. So between the two, the federal government was making these changes, and it's like no one kind of communicated with the provincial or municipal government saying, hey guys, here's what's coming down the pipe. So there was no change in building or real supply at that time. And now supply, has increased because they're trying to catch up. But because of that period of time, we're seeing a fundamental shortage in kind of like available housing units for the people coming in, and it's created a lot of demand. So we had that. And then on top of that, we had these easy money policies, these inflation-based policies like you were talking about earlier, that then just poured fuel on the fire. So I'm not saying, because some people have told me, they're like, well, it's not just supply and demand, because if they raise interest rates, it'll change it. 100%. It is not just supply and demand. But supply and demand is the kindling or is the fire, and then you start throwing all that money into the system, like we did during COVID or even pre-COVID, because we had such low interest rates, and it's fuel on the fire, right? And it just and that's what's caused this thing to just really explode the way it has. Like, we've just seen ridiculous appreciation numbers year over year over the last few years here. Like, it's not healthy. Like, it's not healthy or sustainable for a healthy market, but it's these dynamics that are throwing everything out of whack. So until those fundamentals change, I don't foresee too much of it changing in the long term. And I mean, like, are things going to appreciate 30% a year? No, like, that's not what I'm talking about. I mean, go back to historic norms. Historic norms used to be 5.5% to 6% appreciation year over year over, 40, 50-year period. Now that number's up to about 8 and 8.5% because of what's been happening with money printing and low interest rates and that type of stuff, and these other fundamentals here. So we're seeing those rates start to increase. But if we go back to just normal kind of long-term rates, I think that continues. It's hard to see how it doesn't. And I know this is a long-winded answer, but I'll just share one other thing. Speaking to developers around here, so we had someone that finances works with a bunch of big developers in the financing aspect of the projects at our last event. And speaking to him, he was sharing, he's like, look, guys, even if, because I asked him, like, these government numbers, they want to increase housing. He's like, okay, how are they going to do that? Even if they remove all the red tape and we're able to get approvals, he's like, who's going to build these homes? We don't have the labor force to build the homes as fast as we need them to even catch up. So we need skilled labor to come in, or we need labor, and then we got to train them. He's like, it's not possible. So yeah, like, are we in the middle of like a correction where things have kind of leveled off and come back down? 100%. But when prices in the large majority of areas in Ontario go up by almost 50% in the last 2 years, like it's like we're talking like almost 50%. In almost every area, it's over 30% in 2 years. Like, yeah, do we go up and come back down to like a more normal rate? 100, like, yes, that's necessary. That's healthy. That's good. I know a lot of people might be freaking out, but like, it's, again, if you take a long-term approach, it's a necessary evil. We kind of need that. We can't have things go straight up. Like, the world doesn't work like that. So we kind of got to adjust and move forward. So there's a lot of, and that's what we were talking about earlier with fundamentals. Like, it's these fundamentals are stronger than some other forces. And until those fundamentals change, then we're in the similar situation. So now all of a sudden, if we have long-term supply increases, then we got to revisit stuff. If our population growth drops dramatically, we've got to revisit things. So, if interest rates continue to go up and they want to go up to 8%, which, I mean, the whole financial world will blow up. So I'm not too worried about that, but then you got to revisit things. So we got to kind of keep adjusting things, but overall, there's like in the long term, I still think there's room to move, which seems great. Like, it doesn't seem right, like, I get it. Like, everyone's gonna be like, this guy's nuts, he doesn't know what he's talking about. I get it. I look at it sometimes like that as well, but it is what it is at this point.
So with the increase in value has been incredible for the people that own properties, just regular homeowners as well, especially investors. Best advice I can give people is go back 5 years and buy everything you can, but that's a little tough these days. But what about rents? Because for those people buying those places that have already appreciated in value so much, have the rents kept pace? Are you still able to get cash flow properties? And if not, how do you make them cash flow properties?
Yeah, so you are, which is surprising. So like in Toronto proper, not so much, but in some of the other areas, you can still buy a single family. You can put 20% down with a 30-year mortgage, and you can get some cash flow in some area, break even or marginal amount of cash flow. Not everywhere, but you can. But what we're seeing most investors do, but it's not like it was in the past. You throw a dart and you're getting cash flow anywhere, right? And this thing, people come and talk to us about the 1% rule, which is, I don't know if that's an old kind of, it's like an old school thing now, but
your purchase price times 1% should be the rent you're getting.
Yeah, like, so if you can get rent of 1% of the purchase price, you're like, oh, you should look at that. That's a good opportunity. People are like, hey, that's what I'm looking for. I'm like, okay, well, not in this area, you're not, right? It just doesn't, it's not working like that anymore. But it was a different kind of financial time then with rates and stuff. But what most investors are doing is they're taking what used to be a single family rental and renting it on 2 units. And sometimes they're doing the renovation. Sometimes they're buying it kind of renovated like that. And they're getting pretty strong rents. Like this, we're seeing people get just under, and this isn't in Toronto, this is in kind of, call it the, Hamiltons of the world, Niagara region, different spots like that, or on the east side of the city, similar, north, whatever. We're seeing people just get shy of high $2,000 range, so just shy of $3,000 on a 3-bedroom, upper bungalow. Right, with this one particularly is a little bit larger, so maybe a little bit lower, $2,700 on that, and basement apartments now in the $2,000 range. So the rents have kind of changed dramatically that way. So that's the way people are doing. And then what's happening, and we'll see if this continues. with the recent election and what changes are coming down the pipe for housing. But one of the recommendations from the Ontario Housing Affordability Report was to allow third units on properties. Specifically for a lot of these properties, it might be a garden suite. So now investors with single family properties might not only be able to get two units in there, might be able to get a third unit. And again, then that will drive more income, which will allow for more cash flow from these units. So there's more work involved, like, versus 10 years ago, there's 100% more work involved to get the same amount of cash flow. But it does exist and you can do it. You just gotta put a little bit of kind of sweat equity into it as well. And by that, I mean you have to do the work. You can hire people to do the work. Again, there's additional cost to that. But it's then you got to manage them. That's what I mean with that. But it can be done for sure. We're seeing investors do it all the time, every day.
Yeah, and I think the challenge for people is finding that team to help you with that, right? Like, I mean, I'm not handy. Obviously, I've chosen the handsome route over the handy route. So to find that team of, what am I looking for? What kind of place do I need to add a unit? Is there a separate entrance? And how do you add a unit? And how many bathrooms should I have? And all that. That's the stuff I think a lot of investors struggle with. Like, I've never done it before. How do I learn how to do it?
Yeah. Yeah, and doing it, so you're right, and then doing it right as well. Because some people they'll go into those types of things, and they're going to decide to cut every corner they can, and and then you're not going to get the good rents, first of all, and that just changes the whole dynamic of the property. Usually, you're going to deal with more issues, and then if you decide not to go get permits or whatever for it, then you run the risk of a neighbor complaining and you don't have it. So there's always those challenges. But I agree with you. I think it's so key to. One of our investors that we worked with years ago, he said something, and I'm going to butcher it a little bit because I kind of forget exactly, but he said it's not about the investment, it's about the people, not the investment. Something like that. He was investing elsewhere, and it wasn't local, and he didn't have the team. And although the numbers seemed good, when something came up, there was no team there to support him. And at the end of the day, the investment just wasn't very good. So there's some things that always look good on paper. All these investments look good on paper, and there's rent guarantees sometimes for things, and you can invest in the smallest community somewhere because there's a rent guarantee, but sometimes that doesn't go. It's not guaranteed. We've seen a number of times there's nothing guaranteed in real estate, right? So yeah, I'm with you. You got to find a good team that's there to support you. It makes the whole process easier, and I think that's something that kind of we learned early on because there really was no team to support us. And I stumbled around from one investment type to another. I did one early on by myself, and then I did one with a friend, and Tom and I did one. And we kind of all together, we were doing these different investment strategies with different properties, and we learned these little, bits and pieces here and there. And, if you're able to leverage a good team, you just shorten your learning curve so much. So it's valuable to do that. And I think the best way to do it is probably just, try to find other people that are investing and get the referrals from them. Don't go on Kijiji and, I don't know, depending on where you are in the country, there'll be different Facebook Marketplace, Kijiji, different things. And, try to hire an electrician that's going to save you $200 on the thing because, you want good people. It's going to serve you in the long run for sure.
Okay, so positive cash flow is still an option in Southern Ontario. That's phenomenal because I'm old enough to remember 2008 and dealing with real estate investors, clients back then. And, it was almost like we could divide them in two, the ones that survived and thrived versus the ones that crashed and burned. And it was the speculators that crashed and burned. It was the people that were buying it, assuming the appreciation was going to continue like that, where it was the cash flow guys said, wow, that's crappy that my value's down, but they're still paying rent. The tenants are still paying the rent every month. I still have the depreciation and interest. I still have positive cash flow. Yeah, maybe I can do a reno. Maybe I'll get appreciation, but they survive that. It's the people that really were buying on speculation. So from a safety standpoint, is that probably the biggest thing to look for if there's going to be a correction or be a little hiccup in the value?
Yeah, 100%. For us, the cash flow is the safety net. The more cash flow you have, the thicker your safety net, essentially. A friend of ours in Ohio, when the U.S. went through their downturn, that was way back now. That's '08, right? It was that long ago, the financial crisis. So when they got hit with that, some property values there, they were hit by 60%. So they had, they had a pretty hard and fast property value drop. And a lot of investors were liquidating at the time. And he did as well. And what he's now back in the market, and he's been investing for a long period of time. And what he's looked at, looking back, what he's learned, he's like, the guys that made it, the exact same thing that you were talking about. They were investing from cash flow from the beginning. They weren't investing for the appreciation. So the cash flow is what saw them through. And what was really insightful is he said, look, even when the property values got hit by that much, he goes, the rents, they did take an initial slight dip. They went down maybe 5% or so like that. But then because people were having to, leave their houses and things like that, because it was more of a mortgage crisis and, there was all sorts of issues with that one. But when people were leaving their houses and stuff, it created increased demand in the rental market. And then rents started actually increasing. So the guys that were investing for cash flow early on, they didn't just make it through, they made it through better than the situation they were in before. And that's how we feel today. Like if you can rent it out for cash flow now, you're going to be able to rent it out for the cash flow in the future, especially because in Ontario, we're in a rent controlled environment. So very often, if people are staying for a long period of time, your rents are suppressed a little bit too. So very often, even if there's rent fluctuations, you're still going to be able to rent it for higher than your original tenant, depending on how long they've been there. So that's truly what we believe. And we just try to learn from. We don't try to pretend we know everything. We just try to learn from other people in other areas. And if you kind of study that, it gives you a lot of the clues that you can kind of plug in and figure out and kind of go from there, right?
So let's wrap up. I got two questions to kind of wrap this up. Thank you so much for this today, Nick. So you talked about failures and learning from your failures. I'm a big believer. If you show me a successful real estate investor, you show me a successful business owner, I promise you they've got a lot of failures that get them there. So
they don't want
tell
them,
me about some of the
them.
failures you went through and what you learned from them and how they helped you get to where you are today.
Garrett, we don't have that much time. Look, so here's one. Early on, this applies to business and real estate. And when I'm thinking about it, I'm thinking about it in business specifically, but it definitely 100% applies to real estate investors as well. It's the shiny object syndrome, right? Because when you're starting out, there's always the better option. Right? The grass is always greener somewhere else. So if you did a flip, then you shouldn't have done the flip. You should have used whatever other BRRRR strategy, or so you held on to it. Or if you did use BRRRR, well, the numbers aren't that good. You should have bought a student property, or you don't buy single family, buy a multi-unit. Or there's just always this this next thing. And it was the same thing in our business. Like, oh, we should be doing this, and we should be doing this. And what we found working with a lot of different investors, knowing a lot of business owners, speaking to some advisors we've had over the years as well, is that it's, the focus on the kind of long-term principles of what works will get you far further ahead than jumping from one thing to the next. And it's, our accountant once told us, he saw businesses very often. He's like, look, the businesses, he goes, they grow, you see the spurt of growth, and then they just kind of level off usually, and then the spurt of growth, and then level off. And that's typically what he's seen be the most successful in businesses. And the same thing we've seen in investors is that, it's almost like the tortoise wins the race, right? This kind of steady approach. It doesn't have to be slow, but this steady, consistent approach, focusing on what works. That's been the key to a lot of things for a lot of people, I think. And it's not jumping from one thing to the next. It's not being like, well, this worked for me, but now I'm going to try this. And they're like, oh, well, this wasn't very good. I'm going to go here. You never become really solid or really expert in anything, and you can't fall back on anything. And I guess I would kind of look it back on your industry, just with the way you focused on a lot of the wealth products that you offer and help people with. And if you went from one thing to if you just started offering 3 different things back and forth for 1 year here, 6 months here, 8 months here, because it was the latest hot trend in whatever the market was, you have nothing left. But you just became an expert with a solid foundational product, and then you can add on to that elsewhere. And I think that's been really key, because it's so easy to try to be all things to all people and jump around all over the place, that I guess maybe in my my old age, the if you call it wisdom or call it being beaten down by doing things the wrong way, I would just say that consistent approach on what works is far more valuable than chasing everything you can.
Thank you. So the last question I have, and this is a big belief of mine is, Tiger Woods has a coach. The top CEO has a coach. You've got people refusing to spend a nickel to learn about stuff. And every successful person I deal with, they belong to mastermind groups or they go to conferences. They pay for education. They pay for coaching. So, successful business owner like yourself, are you done? Have you learned everything you know and that's it? You don't need nothing new to learn? What are you doing to continue to learn?
I wish. It's we do everything we can wherever we think. We love meeting new people, talking to guys like you when we first met, and trying to understand like the way you look at things. We were, pre-COVID obviously, and we'll get back at it, but we were regularly traveling to multiple conferences a year. We've been part of numerous different masterminds. Some of the best ones were when we kind of invested more heavily into them. To your point about not wanting to kind of pay for stuff. Sometimes when if you have a mastermind group with friends or just business owners that's kind of like free, or you guys are casually meeting up, I find that maybe the value isn't there the same way because you don't appreciate it the same way. So, we've joined multiple. The most expensive ones we joined were, each $25,000 US. So, as Canadians, you automatically do the conversion. So we were doing that, and it was 3 2-day meetings a year, and that's what we were paying that much for. But they were really valuable. They were really, really valuable. And it wasn't just that. Then it was travel time. We had to fly there, hotel, time away from our families, which we take seriously. We like spending time with our families, so we take that seriously. So, if you can, anytime a problem comes up for us, we try to think about who we know that has faced this problem, or can we find someone that's faced this problem before that we can learn from? And then we reach out to that person first. And that's the benefit of not just, so it's, that's the approach we try to take of learning from other people. And it's the benefit of building that network through these types of things, because then you have this greater network that you can reach out to, not to use and not to bother every week and not to get all the answers from. But when you're actually in need, you're like, hey, like maybe this guy knows, can he shed any light on anything? And that's been really valuable. Like I can't tell you that, it goes back to there's a couple Jim Rohn quotes that I've heard. One is like, you're the average of the 10 people you surround yourself by, and then the other thing is he said, back in when Jim Rohn was doing all his kind of like personal development stuff, $1 million was a lot more than $1 million is today. But at that time he was saying it's not, the journey isn't about the $1 million. And don't quote me on this, but this is kind of what he was saying. The journey isn't about the $1 million. It's about who you become on that journey. That's what's more valuable. And I think that's been the key for us. And I think we feel that we become more valuable as we meet other people, invest in coaches that have gone before us, go to, now there's meetups and different groups. If you find good quality people, it's about learning from them. And we're always happy. Money by speed. If you can pay for a shortcut from a coach or someone that's gone before you, and you can afford to do it, pay. That's my approach. If we're able to pay, then we want to buy speed. That's what we're buying. We don't look at it as like we can search YouTube for 3 years and try to get the answers for free. It's like, no, this person's going to give us the answer now. We're going to get the answer we need, and we get to move forward. So that's what we're doing when we're investing in that type of stuff.
Yeah, we're all going to have hundreds of failures or thousands of failures in our life. What if we could not have a few hundred of those failures by paying an expert to say, hey, teach me how to add an extra unit, or teach me how to scale a business online, teach me how to use social media. And then you have that person's hundreds of failures that they learn from and ended up mastering it. And you can just skip over all that other stuff and just jump to the stuff that works. So that's a great point. Thanks for that. So how do people find out more about Rockstar? How do they follow you guys? Where's the best place to learn more?
Yeah, probably go to it's rockstarinnercircle.com. That's a bunch of information on there. I think we host the podcast off there, YouTube videos that we have up there, articles. We do research reports, all sorts of stuff. So they can just go rockstarinnercircle.com. We have a few books that we give away for free up there as well. So they can just anything that needs up there. If they're podcast people, because they're listening to this, you want to look at the podcast, it's the Your Life, Your Terms show, Spotify, Google Podcasts, of course, Apple Podcasts, all that type of stuff. So they can do that. So it's either rockstarinnercircle.com or search up the Your Life, Your Terms show, and then you can get sick of us in any way you want, through written word, video, or audio. Take your pick.
Thanks a lot, Nick. We'll talk soon. Have a wonderful day.
Appreciate it, Darren. Thank you very much.
Take care. Thanks for tuning into this episode. Don't forget to like, subscribe, and hit that bell button so you always know when new content is coming out. For more helpful tips and tricks, visit our Instagram, Facebook, or TikTok pages at Control and Compound. If you want to reach out to us directly or work with us, visit our website at controlandcompound.com. The links are in the show notes below. See you next episode.